I am mining investor and editor of Resource Stock Digest and a fan of God's team. Gerardo del Real here with my partner, Mr. Nick Hodge, who's also an investor and the publisher of Daily Profit Cycle. Nick's got a birthday shout out. I know we got to get that out of the way, but this is the 316th episode of our weekly therapy session we call Investing in Bizarro World. We have a new pope. The Cubs are in first place. Is gold done? Is the bull market over? We're going to talk about that, what we're investing in. We're going to talk Bitcoin. And of course, we're going to talk about some of the other crazy stuff going on in and around the world today. Plenty to get to. Senor Hodge, first and foremost, how are you and your beautiful family?
We are all doing well, Gerardo. As you say, birthday shout outs to the wife, Lindsay. Happy birthday. I won't tell you how many times she's been around the sun, but it's fewer than I've been around the sun, that's for sure. Everybody's doing great. How are you?
Fantastic. Excellent. Again, let's get right to it. We got a new pope, man. Chicago. He's a Cub fan. I'm convinced this is going to be like 2016 all over again. 2016, for those of you that weren't with us in 2016, is the year that Senor Mr. Nick Hodge, who at the time was running a division for a company based out of Baltimore, a publishing company, offered me my first opportunity and gave me a publishing deal to write my own newsletter, right? I flew out, we had some drinks, we had dinner, we had the contract signed by the end of dinner and a couple of drinks. It was more than a couple if we're being truthful. And it's been a beautiful partnership and an eventual friendship ever since, right? And so subsequently, a few years later, we left and formed our own company, Digest Publishing, and, have been writing checks alongside each other and doing all of that. But I say all that to say, 2016 is also the year my Chicago Cubs last won a World Series. It's the last time I felt as good about this team. And so for a pope, and everyone knows, look, I grew up Catholic. Obviously, I'm a Mexican-American of Mexican descent. But I'm not I don't practice, my faith. I am not religious at all. I respect everyone's faith and whatever makes you a better human, just not my cup of tea, right? But it is an event, however you look at it, whether you're religious or not. And if it's the first American pope, for him to come out of Chicago and then be a certified, I'm not making this up, a certified Chicago Cubs fan. As always, I'm skeptical of the major institutions, but as always, I'm an optimist. So I am hopeful that maybe, it's a fourth turning. It's the first American pope. He's a Cubs fan. I don't know. It could be a good omen, man.
I mean, it was, I don't even know what to say. The white smoke came quickly. I don't know if people were expecting it to come so soon. Only took, I think, 3 rounds of voting or something like that. I don't know how his pizza choice is going to fly in Italy, but we'll see how that goes. We don't do that. We don't do the deep dish in Italia, Gerardo. What else? I grew up Catholic as well, sort of the same situation as you. Altar boy till I was 16. Parents drugged me to 7 a.m. mass, all that good stuff. I was having good fun with the polling and the potential the candidates, the Cardinals that were in the running, at least in the betting markets, to become the next pope. And the betting markets were completely wrong, man. Nobody that was in sort of the top 5 running was got elected pope by the Cardinals. This was sort of out of left field, to go with your Cubs analogy there. What else was I going to say? The guy who was in the front running, Pierre Perelin, I believe his name was. I was saying he looked like Junior Soprano. I don't know if you ever saw his picture or watched that. He definitely looked like Gerardo Soprano. And then,
it's one of my favorite shows ever, man.
I've been tweeting a lot about it. There was another guy named Pier Paolo Pizzaballa who was in the running, and my friend said we could have Pope Pepperoni, the Holy Stromboli. So I was rooting for that guy, but I don't know. I don't take it too seriously, but there's something to be said for tradition, and obviously something to be said for change and fourth turnings, like you say. So don't know too much about this pope yet. It just happened literally before we recorded. So we'll dig into that, and then maybe we'll have more to report. But other than that, here we go. New pope.
Excellent. Let's get to it. I think my favorite quote from Cubs Twitter was, now that he's a pope and he's a Cub fan, the irony here is that, he hates the Cardinals.
Tell your friend Mickey Fulp.
Hey, Mickey, salute if you're listening. It's going to be a good year for us. No, listen, let's get into it. I want to start with gold. We've been warning for, probably at least 6 months that the bond market was telling us that gold was going to get volatile and that you were going to see $100 moves like it was nothing. It was going to become the new normal. And when we started saying that, it seemed out of whack because the moves would be $10 to $15 moves, right? And every now and then you would get like a $30 move, higher or lower. And that was noticeable. That stood out. A $20, $30 move today is nothing. It's cute, right? $100 moves are like, okay, you're paying attention, but we've seen the last 3 days, 50, 60, 75, $90 moves. Last 4 days, frankly. Gold still firmly right above the 3,300 mark. Silver still above 32. Dollar index. The Trumpster got out there and said, I'm negotiating a big deal. It's a big deal. It's a beautiful deal. It's a major deal.
It's fantastic.
Yeah, it's the best deal. And then he announced it, and it's with the UK. And, you know, shout out to you know, the great people out in the UK, if you're listening. But the tariff for the UK started at 10%, and the Great New Deal leaves the tariff at 10%. So I really don't know where the relief is coming from. But thoughts on the Great New Deal and the overall indices, and then a segue into gold, because I think it's all related, right?
Yeah. Oh, of course, it's all related. I'll start with the indices, and then we talk about the UK. I'm unconvinced that we are back to bullish on the S&P. I know we had, 9 consecutive up days or whatever, but, read the tape in the history and you'll see that the only other times that happened was in pretty big bear markets. Earnings were down. Earnings growth was down, projected to bounce back in the second half, which I'm more excited about, but still think we have some tariff consternation to work through. And let's talk about the UK, right? Going out and saying you're striking a deal with the UK is like going out and saying you've made up with your best friend. Like, of course you've made up with your best friend. It's one of your closest allies, etc. Like, let's see what becomes of China and some of these bigger trade partners that have not as good of a cozy relationship. I know, Mr. Besson is out there, and we're going to try to sing Kumbaya here in a couple of weeks, but the market really needs to get to that point and digest it. Right now it's going up on hope, and hope's not a really great strategy for investment. So what else? You wanted to get to gold. I can get there pretty quickly. You had Jerome Powell out this week talking about uncertainty and basically punting, right? Which everyone knew he was going to do.
Sure.
Largely 0% chance that they were going to do anything in May. And the odds say you'll get softness in July. What he said was, if you read between the lines, is that they're going to abandon their 2% target, and they're going to focus on whatever happens in the jobs market as a result of these tariffs. And if they have to, because they have a dual mandate, you'll recall, Gerardo, and for new listeners who aren't Fed watchers, supporting the job economy and keeping inflation under control. Essentially he was saying that, we got to wait and see. And if this tariff situation, this trade situation causes an uptick in unemployment, then, we're going to abandon our inflation mandate to support the employment, i.e., we're going to cut rates in July, which everyone sort of knows anyway, right?
Yeah.
The writing is on the wall with the tape. And that's how you get to gold, right? Because you've had gold going up without rate cuts. And once they start to cut rates, one, gold becomes more attractive because rates are going down. Two, inflation is going to be going back up because we've ticked all the way down to 2.4, 2.3% now. And that's not going to be the case in the second half of the year, certainly if you cut rates. And that's when gold gets a tailwind, right?
Now, and this is speculation, but this is Paul Tudor Jones here, who had an interesting interview this past week. Paul Tudor Jones, for those of you not familiar, is an investment legend in the capital allocation space. He manages one of the biggest funds in the world. He's famous for calling the 1987 stock crash. He made boatloads of money from it. So he's a good macro thinker, and he's someone that, I at least listen to and dig into when he says something as drastic as this. They asked him this past week about the tariffs. And mind you, Paul Tudor Jones was a very adamant Trump supporter pre-election, right? He was one of the people that said, we have the potential to be very pro-business here in America and have one of the best runs we've ever been able to have if we get the things passed that we want to pass along in the Trump presidency. So when asked about the tariffs, he said, look, he says, it's pretty clear. You have Trump who's locked in on tariffs. You have the Fed who's locked in on not cutting rates for now. That's not good for the stock market. We'll probably go down to new lows, even when Trump dials back China to 50% from the 148%, I think it is right now, or 145%. Trump came out this week and he said there's basically no way in hell that he's dialing it back. Now, everybody knows you should take whatever Trump says with a grain of salt, sand, whatever your favorite little grade is, because that can change by noon, that can change after lunch, that can change during lunch. But for the time being, if this is the playbook, be absolutely clear, folks. There's ports in Seattle where the port manager is saying, we don't have any containers to unload. This is playing out in California where they're saying, this is as low as we've seen it since COVID. Shelves are starting to look like there's not much coming in from some of the countries where we used to ship in a lot of the stuff that now has very high tariffs. This is very consequential policy, folks. This is not a partisan issue. This is an issue and a policy that is consequential to every single American and frankly, every single global citizen, some more than others. But here in America, it's very consequential, especially for the lower and middle income classes, right? You're going to feel it the most. That's just the way that it works. When Paul Tudor Jones says something like that, and then I'll have more on Paul Tudor Jones later and his AI prediction, which really was fuck, that's a whole nother thing. But any thoughts on the comment that we could see new lows? Like,
Yeah, I don't know about new lows, but like I just said, the S&P is still bearish. Like it's not back to bullish technically in the short term, despite the bounce off the bottom that it's had. I ran through earnings. What do I want to point to? Yes, I think we get more softness in the sort of June timeframe, and then you're going to get your rate cut in July that likely will turn around equities. So I think you have a rough 6 weeks ahead. I intend to position for the back half of the year. I don't think we get a crash. I don't think we get a recession, but I do think you get more softness in the equities, which is what he's saying. What else? You mentioned that it's consequential policy. It's very consequential and it's playing out in the markets. I just finished writing the foundational profits issue. I know you just finished your JRM issue, and I spent a lot of time on the macro and the S&P sectors, running through the earnings, running through where they generate the revenue from. Worth pointing out that the best performing S&P sector of the year so far, there's two that are up more than 2%, but the best performing one is utilities. Utilities generate something like 98% of the revenue from domestic sources, right? They aren't importing things to burn, to create energy. They're doing it with domestic natural gas and coal. And in a very real way, that's translated into that sector being the best performing stock market sector in the year because it's least dependent on foreign revenue, right? The next best performing sector is staples. The only two sectors that are up more than 2% for the year, staples and utilities. Staples, why? A natural defensive sector. People flock to things like Coca-Cola and McDonald's, Palmolive, et cetera, Unilever. And the other thing is Philip Morris is in that sector, which I've talked a lot about on this podcast. It's up 45% year to date, Gerardo.
You've killed that.
That's a multi-billion-dollar,
it's not a penny stock. That's not anything that I play with, right?
Right.
Like that's
S&P listed company. Not only have they sold enough Zyn last year to span the entire Route 66 in America, if you stack the Zyn cans end to end, but that tobacco is grown in the United States, and so you juxtapose that against something like a Target, which has shelves full of, you mentioned shelves starting to go bare of imported goods, right? And even though Target is a staple, it's down 30% for the year versus something like a Philip Morris that's up. So very consequential policy. You can see it playing out in the indexes, and the subsectors of those indexes. And that's the game that you sort of got to play if you're allocating macro capital. Sort of a different game for the speculations, of course, but
sure.
It's been very consequential policy, and it's not done yet. We still got to get the flow through from whatever happens as a result of these containers not showing up, right?
Yeah, and that's where I wanted to tie it back into gold. That was going to be my last point. If we get further sector rotation and further capital coming out of these big markets, these big indices, looking for a small safe haven, and the bond market isn't cooperating, and the major indices aren't cooperating, and commodities really start catching a bid, it's going to, you think you've seen fireworks in the gold and the silver space and the copper space, you're going to see some real fireworks here in the second half of the year. That includes uranium. I am now convinced, and I could be wrong, and I won't be wrong forever, but I could be wrong for another 6 months, right? I'm convinced that uranium now is firmly on a track to start ticking back up, and it has. I mean, it went from $62 in the spot price to just over $70 here within the last week and a half, and it seems like it wants to run higher. So if you haven't positioned for your uranium positions and you haven't positioned a portfolio that has some uranium exposure, you may want to get that done. It's a good opportunity right now with a lot of the stocks still trading at or near 52-week low. And in the premium portion of this podcast, I'll have a couple of uranium picks to share with you that we own in the portfolio. One, a very early stage explorer, with the potential, if it can make a discovery, to run 10, 20, 30 fold. Also the potential to lose you 50% of your money, like all of these stocks. And another company that just lost 50% of its value, but is a permitted producer in America that has multiple production facilities ready to go and contracts signed to produce and sell uranium into the spot market. So a rising spot price bodes well for that company. Not a coincidence that company's up some 15, 20% this week. So I'll get into both of those a little bit later on. I got to get your thoughts on copper. Every time we think that because of, a potential slowdown, recession or not, a potential slowdown, goods and ports that are empty and shelves not, barren of goods, copper should be pulling back more, in my opinion, and it's not. It's holding in there beautifully. Thoughts on the copper?
Yeah, I mean, short term, the chart has had some hiccups, but hiccups are relative. Hiccups at 4.60 $4.60 copper are different than hiccups when copper is below $4. So it was a bit soft this week. I don't believe that lasts in the second half of the year. I was going to talk more about gold, but I'll just skip over that. So look. And don't think that's what a Dines would say. Look at Ivanhoe Mines today. Puts out a big press release about how they're going underground in a new mine, one of the richest copper mines in the world. It's been 30 years in the making, and that stock's up 10%. So there's definitely appetite for copper out there. And as you were saying, I don't even know where you were saying it. I read your interviews and watch your interviews and stuff. I don't know which one it was in, but people you talk to talking about how this structural deficit for copper is going to translate into higher prices in a meaningful way. I think we're seeing that now, right? We just had a negative GDP print in the U.S. and copper's at $4.60. That's what I mean by I don't see recession in the second half. I think that we work through this trade stuff in the next 2 to 3 months and we get back to it. So bullish on copper, obviously.
Excellent. Let's go back to gold. I had a phenomenal conversation with Mr. Rick Rule yesterday.
I was going to ask you about it.
And it went great. And per usual, you always learn something if you're paying attention when you talk to Rick, right? And look, he had some great insights. If you want to see that interview, folks, we'll put a link here or go to resourcestockdigest.com. It's there. It's absolutely free. It's 17 to 20 minutes of someone that has seen, he calls this his third great gold bull cycle, and somebody that has made a lot of wealth for himself and for a lot of other people, and who knows the game as well as anyone in the space. And he had a lot of great points. And basically, I asked him about David Rhodes from Empress Royalty. There's a free pick for you if you want a great, well-managed gold and precious metals focused royalty and stream company, fully endorsed by Rick Rule. He mentioned it in the interview, right? Phenomenal management team. But David Rhodes from Endeavor Financial, who has raised tens of billions of dollars and who is the executive chairman of Empress Royalty, this tiny company that I think is a pick of yours, Nick. Sorry if I'm giving away the free pick, but they deserve one. Rick gave it away. So I think we
buy a shareholder. I'm just getting that out there.
There you go. Buy a shareholder. Yep. And so he talked about, David's prediction, and David Rhodes, when I interviewed him a few weeks ago, said, look, Gerardo, we looked at the charts, and if we look at the charts and just superimpose where we are, gold should touch 4,000 by year end and 5,000 in 2026. So I said, okay, let's play the silver game. Where does silver go? He said, that's an easy one. Silver is probably going to be $50 by year end and might overshoot to $100 per ounce in 2026. If half of that is true, if all I get is $4,000 gold, which I think I get pretty soon here, and I get $50 silver, which by the way, I also think I get pretty soon here, the portion of my portfolio that's the biggest personal holdings is going to do phenomenally well. And then so I could not be more excited to have two legends in the space come out and basically echo each other's sentiment that both are going higher. Does that mean that when we see pullbacks like we've seen this past week and volatility that that's the end of volatility? Absolutely not. You can continue to expect volatility. You have to know what you own. I'm pretty damn confident what I own.
Yeah, so let me talk about China for 1 second. You mentioned bonds. I don't know if Rick was talking about China or not at all, but it's a very rational way. And there was a great Financial Times and FT article this week breaking down at length, a very long article about, this de-dollarization, which I'm sure you've heard about, Gerardo, but we normally
Yeah.
read about it in terms of all caps or the sky is falling, Chicken Little stuff, people are walking away from the dollar. This was a much more nuanced article, and it went something like this. Yes, China is walking away slowly from U.S. Treasuries. They own fewer now than they did in 2022, and fewer still than they did in 2018. So that de-dollarization narrative is true, but it's not this super volatile. They're going to dump all their treasuries because of a trade war.
Yeah.
For a couple of reasons. One, because they can't, right? You start dumping the treasuries, it's gonna the bond market's gonna implode, right? The prices are gonna go down, and the rest of the reserves aren't gonna be worth whatever 3 trillion that they're currently worth. So they can't just dump on the market. The other thing is that China's been as transparent as China can be,
Yeah.
transparent about what else they're buying, and it's other U.S. assets, right? I mean,
Yeah.
they're buying Fannie and Freddie backed bonds. They're going into other areas of bond markets. They're going into private equity. They're trying to invest in infrastructure projects and AI. So yes, they're walking away from U.S. Treasuries, but they're replacing it with other U.S. tied assets, right? What else are they replacing it with? I'll give you a hint, Gerardo. It's a yellow metal. It's called gold. And their allocation is up from 2% just a couple of years ago to 6%. And this is important, right? Because what happened as China took their reserve allocations from 2% gold to 6%? Well, what happened is gold went to $3,500. And so you're talking about $4,000 gold, $5,000 gold. That would come commensurate with a further increase in diversification of these central banks, not
Yeah.
just China's, but others as well, holding more gold on their balance sheets. And I make the pivot to foundational profits just because that's what we do. But, that's a long-term, I view that as a reserve, right? Like I allocate the capital, like I'm managing long-term wealth, and we're in 20% gold, GLD, right? That's up some 75%, I think, in the portfolio since we started buying it in 2022. So I don't know what the point was there, except to tie
It's going
together
higher.
and
That's
why
the point.
gold has been going up and why it can continue to go higher. So I haven't read the entire Rick Rule interview yet, but I do look forward to doing so, and we'll get a link in there for sure.
Yeah, and oh, look, you did some phenomenal work. Nick and I hosted a webinar that was well attended, and frankly, it was a webinar, really targeting newer subscribers, and a lot of existing subscribers tuned in, which I really love. So thank you all for taking the time to check that out. But we'll post a link to that. Nick had and created some phenomenal slides in there, really highlighting how underowned gold is and how historically we have so much catching up to do just to get to historical levels of, how much gold it takes to buy, a share in the S&P and a share in the Dow, and or vice versa, and kind of where we're at. And it was interesting to me because Rick highlighted that in the interview. He talked about the percentage of traditional gold ownership, and I believe it was somewhere around 2%. And he talked about where we are right now, and we're at 0.5%. And he talked about the catch up that needs to happen just to get back to historical norms. And if you're paying attention, we're fucking in anything but a historical norm on any front, right? Not geopolitically. You got the Palestinians being blown away at will. We're literally starving, and I say we because it's fucking U.S. dollars that are enabling this shit. And then look, I'm all human first. So if it was happening to the other side, I'd be saying the exact same thing before everybody gets their panties up in a bunch. It's absolutely atrocious what's happening over there. So yeah, we're not in a historic norm on any sense of the word or the term. Geopolitically, tariffs, 145% tariffs on China, and vice versa. Critical metals export bans to everybody from China. This is not a historical norm. So I think, to your point and to Rick's point, we're going to overshoot that historical norm because people are going to seek more safety because the world is becoming a less safe place, right? I'll tell you the Paul Tudor Jones thing that scared the living wits out of me, because it's Paul Tudor Jones saying it, not me. When asked about AI, he said they asked him what his biggest fear was. And he said, well, up until 2 weeks ago, my biggest fear was the consequential policy that these tariffs present and the stock market losing 50% of its value if they continue. He said, but then I went to this conference And it was a tech conference. He said, in all of the biggest, I'll give you the exact words. He said, all of the biggest AI model developers, including Elon Musk, were there. So the people that are pushing forward the AI push in America and around the world were there on a panel, and it was a private conference. And of course, Paul Tudor Jones is there because he's trying to get an edge on where to allocate his capital, right? And he said there was a breakout session following a panel of AI model developers in which all 4 of them said and argued that there is a 10% chance in the next 20 years that AI will destroy 50% of humanity.
Like destroy, like dead?
Like adios, Thanos, gone, infinity rings, poosh, ash. Let me repeat that. In the next 20 years, not in the next 50, not in the next 100, you got 5-year-old kids, cool, when they're 25. There's a 10% chance in the next 20 years that AI will destroy 50% of humanity. He said he had to be vague on the details of their argument. This was the AI model developers, including Elon's argument, which if you take his argument and you take the other 3, makes sense why Elon's in a hurry to get to Mars. Makes all the sense in the world to me now, if that's what they're basing it on. And you could say, well, Elon's crazy. Cool, Elon's crazy. Well, what about the other 3? Are they also crazy? And if so, these are the people at the forefront of developing AI. And what they said was, never in the history of the world has there been such rapid advancement in a technology that has 0 regulations globally. He said there is such a rush and a competition and a war, if you want to call it that, between Russia and China and Vietnam and South Korea and us to develop this, and nobody wants to come in second place because of what that means, that there's just no regulation around it. And he doesn't foresee any anytime soon. And he said that's the danger. And when asked about, where that would come from, he said biohacking and weapons. He said there's a real threat that the AI could just develop a weapon on its own that was capable of doing this. And so he said he walked away from that as his biggest fear, and that his solution was he was going to buy hundreds of acres in the Midwest and buy some cattle and buy some chickens, which Nick's ahead of the curve. I don't have, hundreds of acres. I don't have the 42 acres, but I got a cool 13 with some gates and, some cameras and everything that comes with it, and a pretty strategic location surrounded by trees and 300 acres around me that the neighbors own. So, it's as good as it's going to get for being as close to Austin, Texas as I am. But I mean, again, this isn't me. This isn't a conspiracy theorist. This is a tinfoil hat. This is one of the gentlemen in charge of managing the most capital in the world, on the planet. I don't know, man.
It's a very real threat. It's advancing rapidly. We've been using it. I've been telling you how infatuated I am with it, and the things that it can do and how it learns. I mean, and so, gosh, let me just try to break it down and make a little bit of sense. It can be a tool. Let's start there. I see a lot of people worried about taking their jobs, replacing writing. But you've got to go back to sort of the toll booth argument, right? Like when we had automated toll booths, the argument was, oh, you're going to take away like the toll collector jobs. But what happens is traffic flows more freely without having someone there to collect. And the amount of traffic that flows faster through the interstate highway system, through ripples of the butterfly effect, end up creating more jobs and more commerce that replace those lost toll booth jobs, right? So in terms of AI, it could potentially, just like in the toll booths, end up creating more jobs than it destroys, because you're going to need people to teach it and to use it and apply it. And, I think I probably told you, I've already seen advertisements for Gonzaga's, the university here, come get your certification in AI prompting, right? We're already like teaching courses about this stuff. So, and it's had a positive impact on the stuff I do. And it's had a positive impact on my time in terms of, Barrick has earnings. I can go to barrick.com, download the earnings report, put it in there and say, give me a 200-word summary of this, relate it and contextualize it in past earnings, and go find some analyst takes and incorporate those as well. And it does that in less than 10 seconds, right? It saves me a lot of time. It's insane. Yeah. The other thing
Meanwhile, I'm over here typing away like a monkey, doing all the research.
I'll show you how to use it whenever you want, Gerardo.
One of these days I'll make time.
And the other thing is, Did I lose my train of thought? No, I didn't do it. Other things that, not just Elon Musk, but others have said that have a percentage chance of being true, right? Like, are we living in a simulation? Things like that. And, potentially there's whatever, a 5-10% chance we're living in a simulation, whatever the number is, right? So doesn't mean that whatever number you just cited by 2035 or the next 20 years or whatever, 45, I guess it is, that's actually going to happen. But by all means, people are making contingency plans. I mean, I'll tell you again where I'm sitting in Eastern Washington, and you mentioned, it as a catalyst or a reason for why Elon wants to go to Mars. I mean, sure, there's a potential, and you should take precautions to hedge against that. So what else was I going to say? It's not stopping. So you mentioned it's not being regulated.
Yeah.
Well, we also got to power it and cool it, right? And so
Yeah.
until it comes for you and your brethren, there are investments that you can make to benefit from it. Just this week, Google said that it's going to develop 3 small modular reactor sites, right, to power its AI emissions and sell power to the grid. Something like, I don't know, 3, 4, 500 megawatts, something like that. So in that way, gosh, let me try to spin it positively. We're not all going to die in 20 years. Maybe we get some, true clean base load and sustainability out of it, right? Because you ain't powering these things with windmills, right?
Yeah, no, look, and again, back to the positives, there was some positivity there, right? The potential for curing something like cancer, which has been so atrocious and deadly for so many, right? The potential for it spotting the next, biohack or the next pandemic, right? There's everything cuts both ways, but the lack of regulation aspect of it does frighten me a little bit, man. Just the fact that it's the whole Iron Man, but playing out in real life, except like there's 4 major like groups that are running all this stuff and a bunch of subgroups that are trying to catch up, and there's zero regulation on this stuff. It blows my mind. You mentioned the micro reactors. I want to give kudos to the Trump administration on this because, I give them hell on a lot of the dumb stuff that they've been doing, including nominating a surgeon general who's not even a practitioner yet, who just finished her residency. So the next potential surgeon general of America isn't a practicing physician yet. She just finished her residency. When asked about it, the president said, I know nothing about her, but RFK Jr. said she was great.
I was going to say the medical doctor RFK. Yeah.
Yeah. So where were they going? Micro reactors and nuclear. The administration has been very, very supportive on that front about wanting to cut the red tape and potentially even helping finance a lot of that advancement. So kudos where kudos are due. Kudos are definitely due on that front. Let's, again, talking about powering things, let's talk crypto and let's talk Bitcoin. We had Chris Curl on here several times over the past 6 months, and we've had him here, and we should do a better job of bringing him during bull markets, but we've had him here when the sky is falling and people are writing into him and saying, hey, well, you said there would be a pullback. How far is this pullback going to happen? Is the bull market over? He's been really spot on, man, about calling the lows, the potential lows, and then making sure that he's emphasizing this is a buy the dip moment, not a get out moment, right? And sure enough, here we are with Bitcoin. Last I checked, it was back over 100.
Yep.
And look, I had him out here. I want to say last month, if I'm not mistaken. Time's flying, but recently, and walked me through how to buy Bitcoin, like what it takes to set up a wallet. And, everybody knows my bread and butter. It's junior resource stocks, right? I don't even dabble with the major mining companies. I strictly dabble just with the junior resource stocks. I'm wired that way. I love them. I have a passion for them. I'm high risk. I'm high reward. I love it. So he walked me through it, and it was the simplest, like 15-20 minute thing that he did. Somebody as simple as myself understood it. So he's got a promo out. He's got a video out, an educational video. You should definitely check it out. It's highly, highly, highly informative and also simple, even for the most intimidated of us like myself as it relates to crypto and Bitcoin. Any thoughts on Bitcoin and crypto and his video, which I thought was extremely well done?
Yeah, we'll have to have him back on. Maybe have him next week. We'll talk to him and see if you guys are both available. I'm happy to cede my time for Mr. Curl to come on.
And I'm out next week because my middle child graduates from the university.
Oh, well,
so
maybe I'll host him then.
time.
Yeah,
There you
that's
go.
fine.
Let's
Then I can
do
host
it.
him. Yeah,
That'd be
great.
beautiful. Look at that. That worked out, folks. You caught it live.
Congrats to him, by the way. I can't believe he's
Thank you.
graduating. That went fast as well.
Indeed.
Bitcoin. And so I even knew it was going to happen in my dumb lizard brain, right? I had a buy on in foundational profits for the Van Eck Bitcoin ETF at $20. I think we were trying to buy it. This is going back to the March time frame when we were amid that Bitcoin pullback down to wherever it got to, $75,000. And my order did not get filled. I think it got within cents of the.
You've
the
had
order.
a few of those, Nick.
That's how it goes when you set limit orders and stick to your system. That's how it goes sometimes. And I was actually writing about that this month. Like, we missed it. I called it and still missed it, and that's how it goes. And it's back up at 100. It's interesting, right? Because it's interesting because Bitcoin has been historically trading more with global liquidity and dovish policy, and yet we got this run up quickly from 74,000 up to 100 without any rate cuts. There was some talk of QE starting back up earlier this week or last week when there was a treasury auction and the Fed stepped in and bought, I don't know, something like $32 billion worth of 10-year notes.
Yeah.
That was really being done. It wasn't really back to QE if you dove into it.
Less QT.
Yeah, less quantitative tightening. There was the SOMA, the SOMA, which is just replacing, maturing treasuries. But they did spend a little money, and the M2 is obviously continuing to tick back up. So it was interesting to me that, gold went back up in this sort of down inflation, rate steady environment. And I guess I would point back to, and I'll just point to Chris, because he was writing an editorial about it today in Daily Profit Cycle, talking about the de-dollarization that I was just mentioning in terms of China, and saying his take was that there's not going to be one replacement currency, right? It's not going to be just gold. It's not going to be just some whatever Russian, Saudi gold-backed thing. It's not going to be X. It's not going to be Y. It's going to be a basket of things. And that's sort of what I was telling you about China. They're buying mortgage-backed securities. They're buying Freddie and Fannie bonds. And maybe to a certain extent, people are diversifying their reserves into Bitcoin, right? So we'll have to get him back on for his thoughts, but Bitcoin is definitely bullish. And sorry, I missed it in foundational profits. I'm obviously a personal Bitcoin owner, but one of these days I'll strike it right in one of the letters.
What else do you want to get off your chest?
We got to talk about the gold question.
That's right, the NatGold. This is gonna be a good one.
Yeah, should be good. So I'll read the question.
Pitch it. Yep.
Where did the question come from? Because I saw it just appeared on our sheet for discussion this week, and I didn't know where it came from.
Our customer service wizard sent it my way, and I thought, you know what, this is a great. It's a great discussion. Let's put it that way. I appreciated the question.
Sure. So normally the questions go in the premium portion of the podcast, but I've been seeing a lot about this NatGold recently, and it sounds like and have known about it much, more about it than me, and you knew about it much longer or before I did. So let me read the question, and you give them some context, and maybe I'll chime in with anything. But I will say that I've seen this promoted recently as gold has hit all-time record prices as a way to invest in gold and mining companies that doesn't really sit right with me. So let me read the question. We'll get into it. Has Gerardo addressed the issue of NatGold? This is NAT gold, 2 words, NatGold. If so, is it possible to get his comments? Is this being discussed as a way to get the value out of NAK without mining? Maybe tell them what NAK is and then get into NatGold.
NAK is Northern Dynasty Minerals, I think the last time that I checked, right? And
they have a very large deposit. Yep.
They had the Pebble deposit is a huge deposit in Alaska that has had Northern Dynasty Minerals. It's a humongous gold, copper, molybdenum deposit that has had permitting issues for at least the last 2 decades. I lived in Alaska for 17 years. On and off. I have been in Alaska when they were doing the polling and trying to drum up political and local support for this project. I have always been of the opinion that because of the footprint and the people that own the land around the property, that it will never get built.
Never be done.
I don't care who owns it. I don't care if Donald Trump owns it next month. I don't care if I don't care what I'm told, right? So that's my personal belief from speaking with the locals, the native stakeholders. My wife happens to, have grown up Inupiaq Alaskan, right? She's Eskimo and she comes from the region. She's got family in the Nome area that has family in the region. And so this isn't an issue that's like removed from me. Has the company tried to make goodwill and not so goodwill efforts over the past several decades? Absolutely. There's been some good work done to try to advance it in a responsible way. There's been some not good work done to not advance it in a responsible way, which really hurt them early on. So all that to say, I don't think that project ever gets built, though it's a beautiful, phenomenal deposit for several reasons. Salmon, some of the wealthy landowners that would be affected by it, politics. There's a lot that goes on there. So that's one side of it, right? If you just recommended the company, and many people have, and no shade to anybody, right? You make your picks. I win some, I lose some, you do too. That's the way that the game goes. So when I got this NatGold question, I got to be honest. I was sitting here and I was like, okay, I don't have ChatGPT. Let me go be the old monkey, right? Like NatGold. I'm like, what is native real? What is NatGold? NatGold digital. And I'm like looking at this shit. And I'm like, the tokenization of not gold, not Bitcoin, the best of both, right? I'm like, wow, it's buy, right? It's like, this is amazing. Buy gold or buy Bitcoin. And by buy, I don't mean B-U-Y. I mean buy, right? As in both ways. I'm like, you have the best of both worlds? So I'm like, wow, unlocking gold's value without the harm. And so they say the patent pending, right? Patent pending. So it's not even there. It's not even a real thing yet. It's kind of in the ether. It's woozy, it's wazi, as Matthew McConaughey would say in The Wolf of Wall
Black
Street.
box. Yep.
Exactly. So patent pending digital mining process captures gold's value by tokenizing naturally vaulted gold, eliminating the environmental, social, and financial cost of extraction and delivering a superior crypto commodity investment. And so look, I am no crypto expert. I am no expert in digital mining or any of this stuff. I have a pretty decent bullshit barometer. And my advice to anyone that believes they're going to make money, and the only way that you can possibly make money, or the best way potentially to make money off of a project, is by NatGold, patent pending NatGold. Patent pending, folks. Can't even do the shit yet, even if you wanted to. Even if the company wanted to, which we don't know that they want to yet. Even if it was legal, which it's not yet because it's patent pending. Anybody that thinks that this is going to be the way that they get rich, and maybe I'm wrong one day, I don't know. I got a bridge in Brooklyn to sell you. Holler at me, right? DellRealGerardo@gmail.com. There. Everybody has my email now. It's my personal one. Get at me and let me know. Give me your likes and don't likes. You're looking at me, Nick, like my wife looks at me when I give people my PIN number. And it's my real PIN number. And she's like, can you fucking stop doing that? So I quit doing it a couple of months ago. But I just kind of want to see like if anybody would actually like hack into my account because I could trace all of that stuff, right? So anyway, look, I say all this to say I don't think the NatGold digital thing will ever happen. I don't think any project being pitched to you as a potential beneficiary of this patent pending technology is I don't think it'll ever see fruition. So I don't know if you have thoughts. You're the more educated one on this tokenization thing, the digitization of stuff, and certainly there's a place for Bitcoin in my mind, and certainly there's a place for other instruments that aren't patent pending. But you got to give me something real, man. And this just isn't real.
Yeah, I have a lot of thoughts, and I'll try to get through them. Where do I want to start? I was on a panel a couple of years ago at the New Orleans Investment Conference with the host, Mr. Brian London, and I think that was moderated by Tom Calandra, who some of you may know, and Tom was talking about digital gold. I think he might be involved in a digital gold project, and I've seen a lot of this over the years in my time in the financial publishing space. Things that have been promoted, different token projects. At one point, there was like the little gold credit cards where you would break off like a little piece in the end times to like pay for whatever your gas or whatever. And that stuff's great. It's marketable to. It's great for marketing. Let me say that it's great for marketing because you can sell things, the doom scenario. I mean, just listen to some of the words you say. Naturally vaulted is what the copywriter came up with for that. I mean, naturally vaulted sounds great. I mean, that sounds awesome, except you invest in mining companies to get the gold out of the ground. It's the entire point of the entire industry. So let's just start with that. You want to get the gold out. You don't want to leave it locked in the ground. When you leave it in the ground, it's in situ, and it's inherently worth less than it is when it's mined and turned into doré and refined and turned into whatever it's going to be, when it then fetches $3,400 an ounce in a real commodity market. To say that you're going to naturally vault it is a cop out, and it's a B team junior varsity type exit type way to position your project, because you can't get it out of the ground for all the reasons you said. When I look at companies like Northern Dynasty, they get lumped together. Seabridges, Highcrofts, these are the things that perpetually come around in gold bull markets, but that perpetually will not be mines, again, for reasons that you said. So let me quote Rick Rule, which we've been doing a lot for a second. I was watching a video you did with him, not the most recent one, but one from many years ago. And one of the quotes out of his mouth was, if you believe the gold price is going to go higher, the first thing you should do is buy some gold. Buy some gold. He didn't say buy some tokenized gold in the ground in a project that's likely never going to be permitted. Just buy some gold, right? What else? I wanted to relate it to a couple of other things. Similar to, you said it was buy. If you're bullish on crypto, if you're bullish on Bitcoin, me, I'm a Bitcoin maxi, just buy some Bitcoin. You can own Bitcoin, you can own gold, without having to succumb to a newsletter promotion that's trying to, get you wrapped up in this new patent pending way to invest in gold. The other thing I'd relate it to is the private placement market, right? I've talked a lot about crowdfunding and different regulations of deals that people do. And I've often said that the only reason you would go to a crowdfunding deal, and this is an important point, is if you couldn't raise money in the actual capital markets, right? Like if you weren't a publicly traded company that has gone through the rigmarole of getting listed and or doing a prospectus, if it's a prospectus based raise, right, where you actually have to show things and get exchange approval, etc. If your project isn't rigorous, if your management isn't good, and you haven't checked off all those boxes to raise money in the real capital markets, or maybe investors just aren't willing to give it to you because your project isn't of merit to attract capital, then you go to the crowdfunding markets and you raise money that way with retail investors. That's what's happening here with NatGold. They're not going to have a real project. It's not going to be a real mine. And so they're going to the junior varsity B team of retail investors to essentially swindle some loot out of them for this tokenized project. And that's just how I view it, right? So can it go up? Like Trump coin went up 1,000,000% or whatever it went up?
Sure.
Probably. But there was a report out just this week that said, I don't know the exact numbers, but
56 people made money. Everybody else lost.
There you go. And so the house wins, and this is a house type thing, right?
Imagine, ladies, if I offered you a tokenized orgasm.
Wow.
I couldn't help myself. I couldn't help myself.
I'm waiting for, so this is actually real as opposed to tokenized gold. Elon Musk is also working on the brain implant thing.
It's a real thing.
Right?
Yeah.
And so you could have non-tokenized orgasms
Non-tokenized. That would sell.
on demand. Where you just press a button.
Hotcakes. Sell that one like hotcakes, guaranteed.
Yeah. Press
No
a button and get an orgasm. Yeah.
Which, if you should be pressing the button, y'all. Like, y'all got to pick up, by now. We're on our 40s. We're grown. We should know this by now. I think that's a perfect segue to get to the premium portion of our podcast, Nick, unless you got anything else.
No, that was good. I'm glad somebody asked about it, because I've been seeing it for the past couple of months, and I've been scratching my head like, who is buying this bullshit?
Yeah, and I believe that gentleman's name was Shane, and I'm going to top of mine. So if that was you, Shane, thank you so much. It's thank you for asking. It's a good pitch, I guess. I haven't read the pitch. I don't know who the heck pitched it. But whoever pitched it and whoever wrote it, kudos for them for having an original idea. But it's just, in my world, like where I live, it's fantasy.
Last point, and then we'll get to the premium portion. I forgot one thing, is the allocation, right? And it's sort of similar with other alt currencies and stuff. Like, yes, they can and have and will continue to go up thousands of %, but they're so volatile, risky, and unregulated that, at least for someone like me, I can't put enough capital into it to make it worth my while, right? Like I just told you earlier, I had a 20% allocation to gold in my retirement account. Like I would never have a 20% allocation to NatGold, right? With my hard-earned capital. I mean, that's just not how it goes.
Couldn't agree with you more. Let's get to the premium portion of the podcast. Have a great week. I am Gerardo Del Real, along with my partner, friend, and colleague, Mr. Nick Hodge. This was the 316th episode of our weekly therapy session, and we're going to need a whole hell of a lot more of these that we call investing in Bizarro World. Have a great week, everyone.
Adios.